No, there's a lot of content out here that says don't keep any money in the bank. No, that's absolute terrible advice, especially if you're a small business owner looking to get approved for business loans, credit cards, and lines of credit. Now, the reason why you keep some money in the bank is because when you're applying for different lines of credit, especially, the banks are going to ask for business bank statements because they want to see, okay, if we extend some type of credit or lend you money, do you actually have money in your bank account? In the finance world, you have what's called debt service. So debt service pretty much means, are you generating enough income to be able to repay the debt comfortably? And usually there's a little bit of a cushion between how much you're making and how much you owe. So how do you make yourself or your business more attractive in the eyes of the underwriter or the lender? Number one, you want to maximize the amount of cash flow that's circulating through your business checking account. And number two, you want to minimize the amount of money that's actually leaving out of your business checking account. There's an old saying that banks like to lend money to people who actually don't need it. Now, this might sound counterintuitive. It's not that people or businesses really don't need the money, but it's the appearance of not needing the money. Now, what does this mean? So in layman's terms, it means don't appear thirsty. So when you're approaching these banks, man, you're not approaching one of your homeboys or one of your homegirls. You are representing yourself as a professional corporate entity, right? And so you have to put your best foot forward, right? Stop doing ghetto business, stop approaching these banks unprofessionally, and stop looking desperate when you approach the bank. It's one of the biggest mistakes that I see a lot of people make when they're approaching these financial institutions, right? Coming at the financial institutions as if it's charity. One thing you have to remember is that financial institutions, it's a mutually beneficial relationship, right? So you want something from the bank's going to want something from you. You have to remember that banking is a relationship based and it's mutually beneficial. So instead of approaching the banks out of desperation or need, approach the banks as if it's a mutually beneficial or if it's a 50-50 partnership. Now, back to the topic of how do you get access to millions and millions of dollars of available credit. Now, one thing that I've always leveraged is the banking relationship because starting out early in my credit journey, I did not have good credit. I had blemishes on my credit. So one of the ways that I sort of position myself or sort of force my way with different financial institutions is leveraging my cash position, right? So what you can do if you have some type of income source, so whether that's a job, whether that's a business, you want to make sure those transactions are flowing through any type of account where you're looking to eventually apply for credit with that institution because banks love deposits and banks love steady flows of cash flow or revenue flowing through their accounts. So they love to see that. So you could play that to your advantage. I always tell people, let's say if you're at an institution where you've already maxed out all the credit cards and loans that you can get, what you can probably do, and again, this is not financial advice, but just redirect that flow of revenue or that flow of income to a new institution because that's going to give you a lot more favor. Now, a lot of people ask me, how do I get high limits? How do I get approved for millions of dollars worth of available credit? And the way I've been able to do that is by leveraging my cash position. Now, one thing that you can do to build up your cash position is by preserving your cash, right? And the way you do that is extending the runway. Let's say, for example, you get net 90 terms, right? Meaning that, you could rack up these expenses, but you don't have to pay it off until 90 days. Now, in the business world, 90 days is technically a whole quarter. So it's almost 25% of the, fiscal year. And so if you don't have to make those payments every 90 days, then you're going to be able to stack up all of the revenue that's flowing in. You have a lot of money coming in, but you have a lot less money leaving your account. You're going to look more attractive to the banks. Now, a lot of lenders use what's called an average daily balance. So the average daily balance looks over 90 days to see what your balances look like. Now, one of the mistakes that a lot of people have is when they're approaching these banks trying to get these no doc or, not coming to them with any deposits is that, you become more risky because you haven't demonstrated that you have enough cash reserves to repay any debt that you might be applying for or any credit that you might be applying for. So banks use the average daily balance of your banking activity to see, okay, what are your transactions like? And what they want to see an upward trend, right? So they want to see month over month increases in your average daily balance. You're going to look much more attractive to the lender because they see that your average daily balances are increasing. They don't see that many expenses leaving out of your account and they see, your your account balance is growing month over month. So that's going to help you when it comes to getting approved for business financing. And what a lot of you guys see when you apply for these different companies is that they want to see 3 months of business bank statements. Now, I personally deploy strategies within my business where I get almost up to 120 days of float, meaning that I could delay expenses for almost 4 months without making any payments. Meanwhile, within the business, deposits are constantly flowing in and I'm building up my cash position. So once you have a built up cash position, what you can do is you can use your cash position to kind of force your relationship with different financial institutions, because they're going to be more or less willing to work with you or extend loans, or sometimes they might flat out just offer you lines of credit and credit cards because you have such a strong cash position. You have deposits within their institution and they see your banking data. So just to kind of summarize, how you could really leverage your way to getting access to hundreds of thousands or even millions of dollars worth of credit. And this is, I would say, mostly for businesses, is that you want to reduce the amount of money leaving out of your account. And so the way you can do that is by extending the runway or extending the amount of days that you have to repay your debt. And just some examples of different financial products that I personally like where you're able to do that. So you have Ramp, which offers sort of like a working capital where, let's say you have to pay a vendor, and I use this in a lot of cases where I have to pay a vendor, let's say $5,000 or $10,000. So then I can extend that repayment. So what'll happen is Ramp will pay my vendor and then they'll invoice me and I don't have to pay that invoice for 90 days. Meanwhile, whatever I paid my vendor, that's allowing me to make more money. So I'm operating my business, I'm making money, but I don't have to repay it for 90 days. So that gives me a longer runway to make money without depleting my actual funds in my bank account. Another financial product that I've been utilizing is called FlexBase. Now, FlexBase is a game changer because it's pretty much like a net 60, but it's a rolling period. So every 2 weeks, it pretty much starts a new cycle and I have to repay any of those transactions I make from the 1st to the 15th until November 15th. That's when it would be due in full. But again, that gives me 60 days to operate. And again, I'm not coming out of pocket because the expenses are all on the credit card, right? And so that allows me to preserve my capital in my bank account. So less money is coming out. So then let's say over the next 2 to 3 months, my average daily balance is going up in my bank account, versus if I was doing cash and carry, my funds would always look low because there's constantly money coming in, money coming out. Now, just to summarize, one of the strategies that you can use to be able to secure millions and hundreds of thousands of dollars in available credit is by building up your cash position, by minimizing the amount of money leaving out of your account, and then using your cash position to build relationships with financial institutions. Now, another thing that I do, I know this is probably not popular, but I'll go ahead and I'll open up a business certificate of deposit, right? Before I actually start applying for lines of credit and credit cards. It's just another aspect of building that banking relationship. But yeah, so that's pretty much one of the strategies I use, is leveraging the cash position. Everyone talks about don't keep money in the bank. It's all going to depend, right? I'm not telling you or giving you an investment advice, but for someone who's looking to secure capital for their business, you want to be able to show some type of liquidity because you want to reassure the banks that you have the ability to repay them if they do decide to extend any capital to you. So, if you have $20, $50, $100,000 in the bank, that looks a lot better. And that actually is going to improve your chances of getting approved because you actually have a bank rating, right? So the bank rating is an internal metric that banks use. And again, that's based off of your 90-day average daily balance, right? So you want to have a high average daily balance. That's going to put you in the lowest risk, and that's going to increase your chances of getting approved for credit cards and lines of credit. Anyways, if you found this video helpful, let me know your comments down below. Until next time, take it easy and we'll talk to you soon. Peace.